The insurance amendment bill possibly would be one of the boldest move in the recent history that has come about as far as the insurance sector is concerned. What it does is that it brings 5 important changes to the dynamics of how the insurers in the country operate today. The first one is with respect to composite insurance license. What composite insurance license does is that it allows cross entry of insurance companies into each other's segments. What that means is life insurance companies, if an approval comes for composite insurance license, can sell health insurance policies, or they can also enter into other segments of general insurance industry, case in point, motor insurance. This plays on the other side as well. Health insurance companies and general insurance companies, are permitted then to sell life insurance, underwrite and sell life insurance policies as well. What this does is that it increases the competitive intensity with more players coming into each other's segment in India's insurance space. The second one is multiple distribution of various other financial products. Right now, of course, it's insurance intermediaries can only sell insurance products, but if the approval to insurance bill comes through, then they will be allowed to sell other financial products as well, like mutual funds, bank deposits, loans, credit cards, so on and so forth. What it does is that it opens new revenue streams for insurance companies itself. The third one is a reduction of the minimum capital required to start insurance business. Currently, any entity wanting to start insurance business in India has to bring a minimum capital of 100 crore for insurance and 200 crore for reinsurance. That is proposed to be reduced, and it won't be a fixed number. Essentially, the number of minimum capital will depend on the size of the business that the insurance company plans to bring as far as Indian jurisdiction is concerned. The fourth one is captive insurance license. Now, this is a very interesting concept, because if an approval for this comes through, then major conglomerates or business houses will be allowed to start their own insurance entity with their services or the insurance policies being limited to their own employees, making the space very, very interesting. The fifth and the final one is relaxation of investment regulations. Currently, insurance companies can only invest up to 15% into equity markets, about 60-65% in the government debt and balance on the private debt. But with this thing, the power will come in the hands of the regulator, that is IRDAI, in terms of giving approvals to insurance companies and increasing their equity investments or investments in any other segment. It's not just the industry which is waiting for the insurance amendment bill. The regulator has also been keenly watching this one and is awaiting a final approval on this one. This is what IRDAI chairperson told CNBC-TV18 in a very recent interaction which we had at the Global Leadership Summit.
Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates and more.